China's capital markets see a record $45.7 billion outflow in November. Canada's annual inflation rate unexpectedly falls to 1.9% in November. And the World Bank reports that the ongoing war in Palestine is driving its economy into an unprecedented crisis. You're watching Q News and this is the Economic Bulletin. I'm Henny Saif and we'll present comprehensive coverage and expert insights on the latest economic trends and developments. Welcome back. We'll start off with the United States, where the Commerce Department's Consensus Bureau has reported that U.S. retail sales increased by 0.7% in November, exceeding expectations following a revised 0.5% rise in October. The growth, driven by a surge in motor vehicle purchases, indicates robust economic momentum as the year ends. Strong labor market conditions, low layoffs, and high wage growth are supporting consumer spending, while household savings and high asset prices also contribute to the increase. Despite the challenges, like the delayed date of Thanksgiving, retail sales reflect a strong start to the holiday season. In North America, Canada's Finance Minister, Chrystia Freeland, has resigned, citing differences with Prime Minister Justin Trudeau on how to address the economic impact of Donald Trump's tariff warnings. Freeland, who also served as Deputy Prime Minister, expressed concerns over the government's fiscal policies, including recent proposals for direct financial aid amid a growing deficit. In her resignation letter, Freeland emphasized the need for Canada to remain fiscally cautious in the face of potential U.S. tariffs, warning that costly privileges could further strain the economy.
The relationship is balanced and mutually beneficial. How Canada is the largest market for the United States.
Canada's annual inflation rate unexpectedly fell to 1.9% in November, driven by a broad slowdown in prices, with the consumer price index unchanged from October. Travel, tours and mortgage interest costs were the largest contributors to the deceleration. Core inflation measures, CPI median and CPI trim, remained unchanged. The Bank of Canada, which has cut rates by 175 basis points since June, will assess the data before its January rate decision, with markets seeing a 55% chance of another 25 basis point cut. The Canadian dollar paired some losses following the report. Moreover, Canada's fiscal deficit for the year ending March hit 61.9 billion Canadian dollars, surpassing projections by 50%, largely due to pandemic-related and one-off spending. The deficit exceeded the government's original target, with additional expenses related to Indigenous liabilities and COVID-19. Despite managing its debt-to-GDP ratio, Canada still faces a higher deficit to GDP ratio and the looming threat of U.S. tariffs under incoming President Donald Trump. The government has revised its 2024-2025 deficit forecast to 48.3 billion Canadian dollars, while the GDP growth for next year is estimated at 1.7%.
But we know that every step of the way, we will be there to support each other. I understand that there is a tremendous amount of
In Asia, Chinese leaders have reportedly agreed to raise the country's budget deficit to 4% of GDP for 2025, marking its highest level on record. According to Reuters, sources familiar with the matter revealed that the move, aimed at supporting an economic growth target of around 5%, was finalized during the recent Central Economic Work Conference. The planned deficit increase represents a significant jump from the initial 3% target for 2024, amounting to an additional $179.4 billion in spending. According to data from the State Administration of Foreign Exchange, China's capital markets experienced a record $45.7 billion outflow in November, driven by global portfolio shifts following Donald Trump's U.S. presidential win. The outflow was part of a $234.6 billion in cross-border payments, resulting in the largest monthly deficit on record. Despite China's policy-driven stock market rally since late September, investor confidence has weakened, compounded by the yuan's depreciation amid looming U.S. tariff threats. This marks a significant increase from October's $25.8 billion outflow. Enterprise Singapore has announced that Singapore's non-oil domestic exports rose 3.4% in November year-on-year, driven by a surge in electronics shipments. This marked a recovery from the revised 4.7% decline in October. On a seasonally adjusted month-on-month basis, exports jumped 14.7% in November. Shipments to Hong Kong and Malaysia saw growth, while exports to major markets like the United States, China, and Japan experienced declines. Minutes released on Tuesday showed that South Korea's Monetary Policy Board has emphasized the need for quick and preemptive action to counter a slowing economy. This followed a decision to lower interest rates for the second consecutive meeting on November 28th. One member stressed the need for coordination with fiscal policy, while another emphasized the importance of responding flexibly to economic shocks amid global uncertainties. They called for timely and flexible coordination with fiscal policy to address risks effectively. South Korea's central bank governor stated on Tuesday that the dollar-won exchange rate had risen since the December 3rd martial law attempt, but that the market was functioning normally without signs of a crisis. The won traded at 1,438.1 per dollar, slightly better than the two-year low of 1,442 recorded on the day of President Yoon Suk-yeol's martial law declaration. In Europe, the State Secretariat for Economic Affairs has announced that Switzerland's economy is projected to grow by 1.5% in 2024, slightly below earlier forecasts of 1.6%. This year's growth has also been revised downwards to 0.9% compared to an earlier estimate of 1.2%. Looking ahead, the Swiss Centre expects economic growth to accelerate to 1.7% in 2026, its first forecast for that year. However, these figures remain below Switzerland's long-term average growth rate of 1.8%, reflecting the impact of sluggish demand in key export markets like Germany and China. An Egyptian government official has announced that the Egyptian natural gas holding The company has partnered with Shell and British Petroleum to begin production in the Harmattan gas field in the Mediterranean Sea. Production is expected to begin by the first quarter of 2026, with initial investments of $370 million. The development is expected to be completed by the end of 2025 in shallow waters. The field is projected to produce 125 million cubic feet of gas and 3,300 barrels of condensates per day. Egypt aims to increase its natural gas production to 5 billion cubic feet per day by the end of the year, up from 4.3 billion. Egypt and Saudi Arabia signed a supply chain agreement between Egypt's Al Tawkil for iron industries and galvanization and Saudi Arabia's Falak Al Amal company to boost industrial collaboration between both countries. The agreement focuses on manufacturing and supplying telecommunications towers for the Saudi market, with plans to expand into broader industrial projects. This agreement aims to enhance specialized steel industries, galvanization processes, and the production of telecommunications towers while supporting participation in government and public sector tenders within the Saudi market. Morocco's central bank lowered the benchmark interest rate by 25 basis points to 2.5% in its latest policy meeting, the second rate cut this year. The move aims to encourage investment, including preparations for the 2030 FIFA World Cup. Despite easing inflation, concerns over drought risks and agricultural challenges remain. Inflation is expected to rise to 2.4% in 2025, following a decrease to 0.7% in October. The country's economy benefits from a decline in the budget deficit and strong tourism, with record arrivals in 2023. The executive director of the United Nations World Food Programme, Cindy McCain, has raised alarm over the worsening hunger crisis in Gaza, where 2 million people are facing acute food insecurity. Posting on X, McCain revealed that in the past month, only 1/3 of the trucks required to deliver World Food Programme aid reached the region. North Gaza, the hardest hit area, received food supplies from just 2 trucks, leaving thousands of people struggling to survive. McCain called for immediate, unrestricted access to deliver aid at scale, stressing that it is critical to saving lives and averting a potential famine in the region. The European Union and the Palestinian Authority have unveiled a €28.3 million initiative under the Palestine Financial Sustainability Initiative. The initiative aims at enhancing financial access for Palestinian businesses and driving economic recovery amid ongoing challenges. The initiative includes a €16 million EU guarantee facility and a €12.3 million EU grant. Funds will target micro, small and medium-sized enterprises, with priority given to businesses in Area C, East Jerusalem and Gaza, contingent on conditions allowing. The World Bank has reported that the ongoing war on Palestinian territories is driving the local economy into an unprecedented crisis. Economic output in Gaza has plummeted by 86% in the first half of 2024, while the West Bank recorded a 23% decline. Overall, the Palestinian economy is projected to shrink by 26% this year in real terms. The bank highlighted the devastating impact of Israel's attacks, noting widespread damage across all sectors, alongside a collapse in basic services and soaring poverty. And joining us now from Ramallah is the economic expert, Dr. Sabit Abu Rous, to discuss the latest developments in the Palestinian economy. Welcome, Dr. Abu Rous, to the Qnews Economic Bulletin. Let me ask you now, given the recent data from the World Bank, how sustainable is the Palestinian economy given the current trajectory of the GDP contraction, inflation and unemployment?
Greetings, everybody. In fact, today a big report was issued by the World Bank to diagnose the stature of the Palestinian economy. It has underscored the Great Recession in the Palestinian economy, and the recession has reached a percentage of 94%, and there is a slowdown of growth rates in the Palestinian economy. In fact, this economic stature is going to negatively impact the situations in 2025, specifically in the midst of the continuation of the Israeli aggression that is afflicting the West Bank as well, not just the Gaza Strip. And in tandem with the military and economic aggression, there is an economic systematic process carried out by the Israeli occupation forces to destroy Palestinian infrastructure. If you read the report of the World Bank, you will have noticed that it is mentioned that the Israeli occupation forces has been targeting the Palestinian infrastructure and has been demolishing Palestinian infrastructure represented by houses of worship, universities, streets, and roads, and many other public amenities and facilities. In fact, all these practices from the end of the Israeli occupation forces have drawn a lot of negative consequences on the Palestinian economy.
Well, in order to prevent a total and an absolute collapse, what are the immediate economic priorities for Gaza and the West Bank?
What's required? Before we speak about the Palestinian Authority, we have to speak about the role of the international community. The international community has to mobilize efforts and to force Israelis in order to claim their clearance rights. That's one thing. Second, there are diplomatic efforts that the Palestinian authorities are carrying out in tandem with the United States and a lot of other countries like Saudi Arabia. In fact, the current government has signed an agreement with the European Union with around $2 billion to $3 billion in order to rescue the Palestinian economy. And there is an orientation from the end of Saudi Arabia as well in this regard. Palestine receives $10 billion periodically because of the mobilized Saudi Arabian efforts to resuscitate the Palestinian economy. All these measures are being operationalized in order to counter the offensives and the arbitrariness of the Israeli occupation forces aiming at destroying the Palestinian economy altogether. And so the international community right now needs to help the Palestinians or help Palestine restore its clearance, which is in fact equivalent to $2 billion. And this is the most important thing. Second, and ever since the 7th of October, around 200,000 workers were prevented from entry. And the unemployment rates right now have reached 42%, knowing that before the 7th of October, it was around 27%, 27.8%. And right now, we can see that in tandem with the offensives carried out on the Gaza Strip, there is a systematic economic offensive taking place aiming to demolish the stature of the economy in Palestine.
Yes, and Dr. Sabit Abu-Ruz, the economic expert, thank you very much, sir, for your insights. And now, ladies and gentlemen, we'll move on to the latest developments in the commodities sector. Gold slipped on Tuesday under pressure from a strengthening US dollar and climbing Treasury yields as investors focused on the Federal Reserve's final policy meeting of the year amid growing expectations of more gradual rate cuts in 2025. Spot gold was down 0.6% at $2,636.89 per ounce. The US gold futures shed 0.7% to $2,650.50 an ounce. Oil prices fell on Tuesday as Chinese economic data renewed demand concerns while investors remain cautious ahead of a US Federal Reserve decision on interest rates. Brent crude futures eased 78 cents to $73.13 a barrel, while the U.S. West Texas Intermediate crude was down 83 cents at $69.88. These are all the news we have for now, but here's a roundup of today's key headlines. China's capital markets see a record $45.7 billion outflow in November. Canada's annual inflation rate unexpectedly falls to 1.9% in November. And the World Bank reports that the ongoing war in Palestine is driving its economy into an unprecedented crisis. That's all for today's economic bulletin here on Qnews, but please stay connected for more news and updates. I'm Henny Safe. Thank you for joining us.